Good morning from London. I'm Anna Edwards alongside Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. $2.5 trillion Thursday. That's the market cap of firms reporting on the busiest day of European earnings. We'll bring you a deep dive into all of the numbers. Autos diverge. Stellantis reports a big miss on net income, hit by poor US sales. But rival Renault reports its highest ever profitability in the first half of the year on healthy demand for SUVs. Still to come, earnings from Anglo-American, AstraZeneca, Lloyds Banking Group and more, plus a host of key C-suite interviews.
In the meantime, a quick check on these markets here. You are seeing risk sentiment decidedly lower, and I wonder how much of that is already responding to some of the earnings numbers we got. We're going to dive into that in just about an hour's time ahead of the opening trade. The Euro Stoxx 50 futures down by 0.8%. Some underperformance right here in London as well, down 0.4%. But to me, it's the bond market that caught my eye. The two-year yield at 4.38, down about 4 basis points, and the 2s-10s curves over in the States, the least inverted, going all the way back to June 2022. A lot to digest. We've got you covered. The countdown to the opening trade starts right now.
Welcome to the programme, everybody. It's just gone 7 o'clock here in London. Let's get straight to some of the breaking news then, and we'll go straight to Anglo-American. We've got plenty of corporates then, Kriti, breaking 7 o'clock UK time, of course, on this busy day for European earnings. In terms of the Anglo-American story then, we're getting these adjusted profit figures, which look to be much better than expected for the first half of the year. But there has been an adjustment, and they are saying that they're impacted by a $1.6 billion impairment on their Woodsmith assets. This is an operation in the north of England that has had a lot of attention. But the bigger picture story here is, of course, is how they're fending off BHP, restructuring plans very much in focus, the coal business, and we've seen a sharp drop in some of the underlying commodities that go under this business. So we'll talk about all of that.
Yeah, that $49 billion approach from BHP as well, that you were talking about the coal business, but then you also have their De Beers business as well, whether there's going to be a potential spin-off of that, not to just kind of appease the BHP push, but other potential suitors down the line as well. That's just one of the stories that we're going to be watching. We also have our eye on the pharma space. AstraZeneca, for example, I believe also hitting the wire this morning. And this is really interesting because you had some pretty positive numbers coming out of Sanofi, for example, Roche as well coming in. And then when you look at AstraZeneca, which I am still waiting, oh, here it is, raising their full year guidance when it comes up, you are actually seeing some positive numbers out of AstraZeneca as well.
Yes, absolutely. Saying total revenue, the view there is now mid-teens % growth. This had been anticipated. Analysts at Bloomberg Intelligence were saying ahead of these numbers that we could see an upgrade. So we'll look for further details there on the Astra story. Let's move on to Unilever. Second quarter underlying sales up by 3.9%. The estimate was 4.33, and this perhaps a fairly unforgiving sector if you miss those estimates. It'll be interesting to see what they've managed to do on volume and price. It seems like on volume they're beating, but on price they are missing. And that's really interesting because that might contrast a little with Nestle. We'll talk about that in a moment. But this is a business that's actually beaten on volume in the last couple of quarters, and they continue to do that, but it's not delivering the right against expectations. At least it's not delivering on the top line.
Well, you know, I think what's interesting is even though we are seeing that bump down on the pricing, their operating margin has actually grown in a really big way. The estimate there was 17.7%. The number's coming in at just shy of 20%. So I wonder what the market will respond to, what piece of that the market will respond to at the opening trade.
And, of course, there's asset sales could be in the mix as well. We'll see what they have to say about ice cream, another theme that might run through the show. Let's see if we might get summer. Let's talk about Lloyds Banking Group. We've had numbers out there as well. Second quarter pre-tax profit, £1.7 billion against an estimate of 1.5. So this is better than had been expected, and that's despite, well, there's an impairment charge, but the adjusted impairment charge is less than had been anticipated. So that's the good news coming through from Lloyds Banking Group. They're confirming their guidance for 2024 as well. And, of course, this is a big mortgage lender in the UK market and has a real sense of the UK economy and its savings habits, the new UK government imposed. We will certainly have a lot to talk about when it comes to that Lloyds conversation.
We certainly will. And the net interest margin is really interesting. It's coming bang on line with estimates, but that may not be a positive necessarily. Sometimes when you come in line with estimates, that's interpreted as a negative for the markets. As we, of course, get those numbers out, we're also getting Total hitting the wire here. The second quarter adjusted net numbers there, $4.7 billion. The estimate was $4.9 billion. So seeing a little bit of weakness in the Total numbers. Their second quarter sales coming in at about $53.7 billion. It's interesting, you know, the production numbers are coming in on point. The buyback shares are in line with expectations. That adjusted net figure coming in a little bit light.
So let's go from the the oil sector, let's go to Nestle. So now we're backtracking slightly to the earnings that we had in the last hour, Kriti, but just to give a sense to those just joining us of where we are on the earnings story. We've got Nestle numbers downgrading their full-year sales guidance. It seems as if they didn't have as much pricing power as they'd had post-pandemic. That was a trend we watched for a long time. And this is a business that struggled to get back market share. So is that a contrast to Unilever? I mean, Unilever is missing on the top line anyway, but will they be rewarded for their volume achievements, or Nestle for hanging on to pricing? It seems that they've got different strategies coming through here post-pandemic.
Yeah, their sales guidance is really interesting here. Growth coming in about 3%. The estimate was 4%. That cutting that guidance is something that's going to be likely punished by the markets. But to your point on that Unilever comparison, is this a broader consumer story? We could really actually see that even the pricing, maybe consumers aren't willing to digest that as much. And I wonder how much price cuts are coming down the pipeline.
Yeah, we had seen consumers trading down, hadn't we, during the pandemic and while prices were high. And how that all settles out for these branded goods companies is going to be interesting to watch. Excuse me, let's talk about what we've got on the pharmaceutical sector then, because that's a big area of focus. We've done AstraZeneca. Let's go back to Roche, because this is going to be a conversation we'll continue to have through the programme. It's all about the obesity pipeline. We saw just last week that this was a business that got a boost on some really early stage data around obesity. And they've seen this on the back, though, of some disappointments that they've seen on cancer and Alzheimer's.
Yeah, so Roche, the headline there, raising their annual profit. I believe the CEO saying they've already cut about 25% of their products. Sanofi, on the other hand, raising their full-year business EPS growth as well. So, yeah, some positivity coming out of the pharma space. We'll dive into those AstraZeneca numbers soon.
Stellantis, just worth a mention, because we said in our headlines the contrast between Stellantis and Renault is really worth pointing out. So Stellantis with a miss, weaker US sales seems to be the thing here, being hurt by inventory levels and seen a string of US execs departing. So that's the negative side. On the industry level and also company specific, the CEO acknowledging that mistakes were made in terms of the Stellantis story. But that really does contrast with what we've heard from Renault. So I guess we should go back to some of the earnings overnight.
Well, the Renault is interesting because it's their highest ever profitability yet. And I think what really helps, I'm putting my Guy Johnson hat on here, they have a simpler design in terms of what they're actually manufacturing. So their products require less raw material costs. They're having more demand for their sports car vehicles. That's seeming to help and show up in the profitability story. The question is, in terms of supply chain advantages that they have, what next in terms of whether or not they can actually keep it up? And that's a problem that you're seeing cross-sector, including in the luxury space.
Yeah, absolutely. So let's go to Kering, because there we've had headwinds coming from China predominantly for this sector, and Kering seems to be no different, although were they a little quicker to the crisis than others in the sector, because Gucci has had issues for a long time. So they issued a warning last night. The second half of the year, they're seeing recurring operating income set to drop by 30% year on year. ADRs were down by 9% at one point in New York trade. So that gives us a sense of how much negativity there could be in this stock at the open. Gucci has its issues. China is the driving force behind some of those, but they brought in a new designer quite some time ago now who's starting to have an impact.
Yeah, he is starting to have an impact. But I think when you broaden this out, you're seeing that continued weakness. We'll see what those Hermes numbers actually look like as well. But basically, the idea here is no one is able to weather the storm that is showing up in the luxury space. Kind of marry that with the weakness you're seeing in the consumer space this morning. I wonder how much of a broader economic read we have in that.
OK, let's get into some of the earnings stories in the financial services sector then, Kriti. Julius Baer saw inflows of client funds accelerate in the first half of the year. This as the Swiss private bank names Stefan Bollinger this week as the incoming CEO, who will take over in February. Joining us now is Nick Dreckmann, the interim CEO of Julius Baer. And Nick, we thank you very much for your time today. So clearly there's been a lot of news around the business. I want to start with the inflows story. You're seeing client inflows accelerate. I wonder if you can tell us a bit more about where that, what new money and where it's coming from. Tell us a bit more about the flow story.
Good morning, Anna, and thank you very much for having me. Indeed, we had admittedly a difficult start into the year in January, but since then we have seen clearly a momentum picking up in terms of net new money. I mean, if I look from February all the way to June, we have seen an inflow of north of 3%. And that actually comes throughout all our major markets that we service. So in that sense, momentum definitely has been picking up.
OK, so momentum is picking up, and that's the story here. Do you sense that after that challenging start of the year, then, do you feel that that is behind you? Because, of course, the collapse of that real estate business, Signa, put so much pressure on the business. We saw the CEO departure as a result of it. Have you fully turned the page? Is that now a story that is entirely behind you? There are no more costs lurking in relation to Signa, for example?
Absolutely. I think the momentum has definitely changed, not only in terms of net new money. I mean, client activity has significantly picked up. Our asset base has been rising 11% to 474 billion of assets under management. And on the back of this, also recurring revenues have actually increased. In that sense, also the capital generative business that we have has shown a very strengthening of our capital base. The CET1 ratio stands at 16.3% at that point in time. And last but not least, we also have been managing the cost base quite diligently throughout the first 6 months of the year. But yes, all these 1st of February news have been behind us.
Well, Nick, it's Kriti in London. I want to bring it over to then the M&A story. We had EFG International on just yesterday, 24 hours. There's been a lot of reports that perhaps there's a tie-up in the works between Julius Baer and EFG. Can you give us an update on that? What are you thinking in terms of the M&A picture for Julius Baer?
Well, as a matter of principle, Kriti, we do not comment on these kind of rumors. But having said that, we have been hiring a lot of bankers in 2023, almost 100 net new RMs. We also have been hiring quite significantly in the first half of the year 2024 with 21 new bankers. And we want to make these investments work. So we have plenty of homework. We want to focus on our organic growth investments, and that's basically what we're focused on.
Well, let's talk then about perhaps your career path. You are, of course, the interim CEO. You are keeping things calm over at Julius Baer. What's next for you in about 6 months? Will you continue to be the deputy CEO? What's your future looking like?
Well, we appreciate the announcement that we have been putting out on Tuesday. And having Stefan Bollinger joining is a good news for Julius Baer. Eventually, he's a great banker with a lot of experience, and in that sense, he will bring definitely new momentum to the bank as well. And until then, as you rightly say, I will run the company along our strategy execution in order to continue to progress to remain, the pure play wealth manager.
And can I ask, Nick, we started talking about Signa, and just finishing off that conversation, you've been winding down the private debt business as a result. How far through that are you? What do we still need to see in the private debt business?
Actually, we have been progressing quite well there, as you can see also from our figures. We have been reducing the book, which at the end of last year stood at 800 million notional exposure, down to 600 million already by mid this year, and we'll continue to wind it down in a value-based manner for clients, but also for Julius Baer. In general, we believe we will be done by the end of 2026 with this.
Nick, I wanted to ask you a final question on kind of the macroeconomic outlook here. The Swiss picture, the Swiss economy broadly is, of course, very much in focus right now, given its dynamic on interest rates with the rest of Europe. Give us your outlook here. In the next 6 months, given the geopolitical volatility that you were seeing on both sides of the Atlantic, how do you see that hitting or helping some of your interest and your net income flows?
We believe there will be quite a choppy second half of 2024. But that's actually not necessarily bad news for Julius Baer, because that helps us to stay very close to our clients, seize opportunities. We currently believe that clients should actually stay invested. Yes, you've seen also yesterday a correction that actually from a technical point of view is a healthy thing, because we continue to believe that we're in a secular bull market. And from that point of view, we definitely recommend our clients to stay invested, but stay on the toes and be on the lookout for opportunities, and potentially also to profit from what might come during the second half of the year.
All right, Nick Dreckmann, the interim CEO of Julius Baer. We have to leave it there, but we thank you so much for joining us on the program this morning. And that's just the start of our earnings palooza in the next couple of hours. Plenty of great guests coming up in the next hour specifically. We're going to be hearing from the top executives over AstraZeneca, Roche, and several others. Also ahead in the next hour, at about from 8 a.m. UK time, right here on the opening trade, the CEOs of Anglo-American, Unilever, and Lloyds as well. These are interviews you do not want to miss. But in the meantime, stay with us because we're joined by the Olympic sponsor and French telecoms giant Orange. That exclusive conversation coming up shortly. Stick with us. This is Bloomberg.
Welcome back. This is the opening trade, 7:18 here in London. This is the futures picture. We're factoring in a lot of earnings stories. Could the luxury sector beat a weight on the CAC 40 once again? Let's have a look at where we are on the banking space, the fintechs in London, because we've had some news out of Revolut this morning. Revolut says it has received a banking license from UK regulators. This has been a long time coming, a long time in the works. It goes into some sort of holding pattern phase now, known as the mobilisation stage, which is on its path to as a new bank, essentially. So we'll watch how this one develops in the fintech space, Kriti.
We're all getting some headlines here from Air France, KLM. I'm going to get my words right here. Trimming their capacity outlook. They're really attributing a lot of that to the Olympic Games, saying that, and of course they had given this warning earlier, but they're expecting a bigger than expected shortfall from tourists avoiding Paris. Their group capacity now expected to rise about 4% from last year's levels. It was a previous estimate about 5%. We'll see how that's received over at the opening trade. In the meantime, let's go right to that story. With the Olympic Games shifting into full swing in Paris, kicking off tomorrow with an ambitious opening ceremony centered around the Seine, French authorities have deployed tens of thousands of security personnel to protect the outdoor event, which comes as the country remains with a caretaker government following those snap elections. Bloomberg's Caroline Conan is covering the story for us, joins us now this morning in Paris with a fabulous guest. Caroline, over to you.
And I'm very happy to be joined by Christelle Heidemann. She is the Orange CEO, one of the big sponsors of this Paris Olympics. Christelle, good morning from this Goldman Sachs beautiful terrace with the view of the Arc de Triomphe. Today, you're one of the CEOs actually having lunch at the Elysee with President Macron, with other CEOs, including Elon Musk, including the Coca-Cola CEO, the Airbnb CEO. That means everyone is here. It's big business.
Everyone is coming to Paris for the Olympics. So, of course, it's a unique opportunity to meet. I think as CEOs and sponsors of the Olympics, we are used to discussing, but everyone wants to have fun and celebrate the Olympics. So that's the spirit.
We've obviously had 1 month of political uncertainty, a pretty bad mood right here in Paris. Is that over now? Are we going to see a boost on the morale, a boost on economic activity over the next few weeks?
Well, what I can tell you is that the mood currently is really excitement. I mean, Paris is getting ready to welcome the world. At Orange, of course, we are very proud to be the unique telecom sponsor of the and technology partner of the Olympics. So the city is getting ready. We are now 1 day before the opening ceremony. So it's really excitement. We're not anymore in the bad mood or whatever. Everyone wants to talk about sports, the Olympics.
As a unique telecom sponsor, you're obviously in charge of technology, including during this Olympic ceremony, which is for the first time not going to be held in a stadium, but it's going to be moving along the Seine within the city. How difficult is that going to be in terms of technology to broadcast this Olympic ceremony to at least 1 billion viewers, given you're going to have like boats moving with athletes on the river?
That's correct. We are the unique telecom sponsor, and if you think about it, in Tokyo, there was 5 telecom operators. So we have a huge responsibility. But of course, we are getting ready, and just to realize, the Olympics is a huge event in itself. It's the equivalent of 48 football cup, worldwide cups. And we are getting ready, and of course the opening ceremony itself is a challenge within the challenge. So we are getting ready. We've deployed the latest technology, of course fiber. Just for the opening ceremony, it's 500 kilometers of fiber that we've rolled out and deployed. We will use the latest 5G technology, including body cams. So we will have body cams on the boats. We will have also body cams for kite surfers in the marina of Marseille. So we will have HD videos close to where the event is happening. And of course, the opening ceremony, it's on 6 kilometers, more than 100 boats to connect, thousands, actually hundreds of thousands of fans and spectators and the organizers, and media who will broadcast. And so we have a huge responsibility, but that's what we love to do, and it's a unique opportunity for us to demonstrate the know-how of a telecom operator.
Huge responsibility, of course. Atos, the troubled IT company, a French IT company, is in charge of cybersecurity, but obviously working with you as a telecom operator. Are you concerned about cyber attacks during the games?
As a telecom operator, cyber attacks is unfortunately our day-to-day. We are always obsessed and protecting our networks. So of course we will do that as part of our job, I would say, for the Olympics, and working hand in hand with all the technology providers. So of course during the Olympics, but I would say not more during the Olympics than what we do already every day to protect our customers.
You reported your earnings yesterday, a pretty good set of earnings with this idea of your resisting price pressures from rivals. What's your outlook for the second half of the year?
So indeed, we had good H1 results, and we've guided and we've reconfirmed fully reconfirmed our guidance for the year. A lot of attention on the French market, but the telecom markets in Europe are highly competitive indeed. But we are driving our strategy, our Lead the Future plan, and of course focusing on value creation for customers and being competitive in every market, of course.
You've also expanded in Spain recently. Where are you looking to expand next?
So we are in Europe, we are in Africa, we are in B2B, we are in B2C. We are very focused on delivering the Olympics. And we will showcase, by the way, some use cases and technology that we will embark then later on for other events, but also for our B2B customers. And of course, no detail on any M&A plan, as you would expect.
I want to end this interview on the fact that you're one of the very few female CEOs in the CAC 40. You're a female leader. We're here one day before the Olympics. How important is sports to empower girls, to empower women in order to become later, perhaps, a female executive?
Well, I think at Orange we're convinced, but this is true for every leader. We're convinced, and the Olympics, by the way's mission is also to make sure that sports is part of everyone's life. And so personally, I can talk for myself. I'm going to run 10K because Orange is a sponsor of the Marathon pour tous during the Olympics, the unique event that's open to any. I mean, you don't need to be a professional runner to attend this event. And I will do a 10K, but I think beyond that, just walking to the office instead of taking the metro or the car, that's also things we're trying to promote. And that's just a way of, it's well-being. And I think we all need that.
Thank you so much, Christelle Heidemann, the Orange CEO, who's going to run the marathon, or at least the half marathon, at the end of these Olympic Games. 15,000 athletes are expected here over the next couple of weeks, and as many as 15 million visitors in Paris for these 2024 Olympics, which start tomorrow.
Caroline, thank you very much. Bloomberg's Caroline Carnell speaking exclusively with the Orange CEO live from Paris ahead of that Olympic Games then. So, there's that buoyant story to tell about a city getting ready for the Olympics. Air France KLM, though, with its news, taking the edge off that just a little. We'll be back to some of the earnings stories. The pharmaceutical sector very much in focus. Don't miss our interviews with the CFO of AstraZeneca and the CEO of Roche. This is Bloomberg.
30 minutes away from the start of the opening trades across Europe. There's plenty going on. I'm going to call it earnings palooza in Europe here. And one of them, of course, top of mind is going to be AstraZeneca. And that's a company that we watch very, very closely, of course, right here in the UK, but globally as well. I want to wrap some of their earnings because not only are they raising their guidance, but they're also raising their profit as well. Their sales forecast coming in much, much stronger, boosted a lot by the demand for those blockbuster cancer drugs. I want to bring in the CFO of the company, Aradhana Sarin, joins us this morning. Aradhana, pleasure to have you on the program. Let's just dive into some of those numbers if we can. So like I said, AstraZeneca raising its profit and sales forecast, but this is also amid a larger boost, a larger kind of goal to double its sales by the end of the decade. But cancer drugs are the key to that. Give us an update on that part of the business.
Yes, thank you so much for having me. We've had a record quarter, as you know, 12.9 billion in revenues in the second quarter, with 17% growth. The biggest business that we have today is our oncology business, which is at 5.3 billion and had 19% growth in the quarter. But also, as you mentioned, we're seeing growth across our franchises. Our cardiovascular medicines franchises grew 22%. Our respiratory business grew 26%, and our rare disease business grew 14%. So again, double-digit growth across the board. And I'd say it's the same actually across geographies. In China, emerging markets, we're growing 18%, in the US, 17%, in Europe, 24%. So there's clearly very strong demand for all our medicines. But most importantly, as you mentioned, 2 months back, we did an investor day, and we set some very ambitious targets for 2030. And that includes achieving 80 billion in revenues by 2030, as well as 25 blockbuster medicines, 20 new medicines. And we're on this journey where we're investing a lot in R&D and hope that R&D is productive and we are able to bring really innovative medicines to patients.
Well, I'm glad we're talking about innovative medicines here because, of course, I think everyone wants to know where AstraZeneca is going to be on the obesity story soon. We know that AstraZeneca is wading into that territory. It's also a very competitive market, not just in terms of creating the medicine here in Europe, but, of course, appealing to perhaps a more American crowd and arguably globally as well. Give us an update there on when we can get the next readout on AstraZeneca's obesity offerings.
So we have several medicines in obesity. One of them is obviously GLP-1, which the current GLP-1s in the market, which are all the rage, are all injectables. So the program that we have, 5004, is actually an oral GLP-1 medicine, and we expect to announce phase 1 data from that later this year. We also have 2 other medicines in development with different mechanisms of actions. One is a long-acting amylin, which has sort of this lean muscle sparing effect. And the third is an oral GLP-1 glucagon, which also we'll have very early data on. So we're advancing all 3 medicines. Our strategy in obesity is not just focused on sort of weight management, but really weight management for patients who have comorbidities. So these are patients who have, for example, hypertension or atherosclerosis or other comorbid conditions that require management at the same time, kidney disease, et cetera. And so our strategy will not only be for monotherapy, but also for combination therapies and doing these sort of fixed dose combinations, which are able to help patients with not just weight management, but the underlying disease as well with these comorbidities.
And Aradhana, with that focus on comorbidities, good morning. What can we see as the approach to growing this part of the business, growing the obesity treatments? Is this going to be entirely in-house and organic, or is this going to involve deals?
So far, it's been organic, but last year we also did a licensing deal with a company called Echogene, which is where we licensed the oral GLP-1 molecule. Our strategy has been obviously heavy investment in R&D. We invest 22% of our revenues in R&D, but at the same time looking for innovation outside because, again, not every drug and every area we'll be experts in. So over the last 18 months, we spent close to 7 billion in deals, multiple deals in both licensing and acquisition. So we've entered, for example, in new areas where we did have some early research, but taken a giant leap forward for example, in the case of radiopharmaceuticals or in the case of cell therapy and so forth. So I think it's a mixed strategy of both investing heavily in-house as well as licensing and acquiring products that sort of fit very nicely strategically with our business and help drive us forward.
Can I ask you about the UK climate at this point, Aradhana? You're talking to us from your UK business headquarters, of course. The UK government just this week, the Prime Minister saying that he's on the side of business, the Chancellor saying that the country is open for business as she attends G20 meetings. What do you think should be the top priority for the new government for a business like yours?
You know, we look forward to working with the government. I think it's great that there has been an increasing focus on life sciences, and we welcome the investments that the government will make and encourage innovation. As you know, innovation and growth is where AstraZeneca is focused. You know, from our standpoint, what's really important is not just the investment climate, but also the climate for access. You know, innovation is only fruitful if patients actually get access to those medicines once they're developed and launched. So for us, the key focus would also be access to these innovative medicines.
Aradhana, thank you very much. Thank you for joining us. AstraZeneca's CFO, Aradhana Sarin, with us to talk about Astra's performance. Let's stick with the European pharmaceutical story. Roche has raised its 2024 profit forecast as new drugs drove revenue for the latest quarter and the first half of the year. Joining us now is the Roche CEO, Thomas Schinecker. Very nice to speak to you, Thomas. Thank you for coming in to speak to us. So you've increased your guidance. A lot of this has to do with eye disease treatments, I understand. Increasing the guidance, how convinced are you that the performance you're delivering now then is sustainable around this particular eye disease business, but around the broader story as well?
Well, first, thank you very much for the invitation. We've had a really strong first half of the year, and we saw an acceleration of our growth momentum in the second quarter with 9% growth. And if you look at where this growth is coming from, it's coming from both divisions. Pharma is growing very strong, high single digit, and diagnostics as well. Within pharma, our new medicines are driving this growth, but Vabysmo being really an outstanding growth driver continuously. And on the diagnostic side as well, we have good growth across the board. So with that, we believe that the growth momentum that we have is sustainable this year, but it will carry us into next year as well.
Can I ask you, we were just having a conversation with AstraZeneca about obesity drugs, Thomas, which is clearly the hot topic within this sector. Can I ask you about any gaps in your obesity pipeline? We've seen some good early stage news from Roche that had an impact on the share price just last week. But where do you still think the gaps are in the Roche portfolio on that product?
We're very happy with the acquisition that we did at the end of last year with Carmot. And here we brought in a number of different clinical assets. So we didn't only buy one medicine here. We bought a whole pipeline of obesity and CVRM, cardiovascular medicine pipeline. And the strategy was also here to actually combine it with a number of different medicines we already have in our pipeline. We have, for example, one medicine that actually counters the effect of, or the negative effect of GLP-1s. One of the negative effects is weight, that you don't only lose weight, but you also lose muscle mass. And with the GYM329, we can counter that effect. So we will combine medicines. And we also see that in a number of other diseases that we can combine these medicines to deliver more value to patients.
So, Thomas, this is Kriti in London. I want to follow on that obesity story because as more and more players get involved, as Anna was pointing out, we just had this conversation with AstraZeneca. But, of course, you're coming up against some of the other major pharmaceutical companies around the world, Eli Lilly, Novo Nordisk, in this kind of space. Talk to us about pricing the obesity drugs, especially when mass marketing to an American consumer. Of course, cheaper is going to be better. How is Roche thinking about pricing some of these drugs?
So if you look at the initial data that we have released, it really shows promise that these next generation GLP-1 GIPs can be better than what's currently available to patients. In addition, being able to combine it with a number of other medicines will mean that we can significantly differentiate versus the offering that you see today, or that's in the pipeline from a number of other companies. So we believe that we can derive additional value here.
Talk to us then about not just marketing to the American audience, but the global audience as well. In terms of market share, I'm just looking at some of the Bloomberg data around Roche. About 42% of your revenue still comes from the state. How are you thinking about international opportunities? Where is your biggest growth like next on the global stage?
Yeah, we're growing well also into international markets outside of the US, in Europe, in the US, of course, also in China, in Asia, in Africa. So we really see good growth across the world. So I wouldn't want to pick out one specific geographic region, but really, it's really across the board.
Thomas, in terms of these obesity medicines then, is there going to be room for all of the different delivery systems and all of the different types and dosage of drugs here? Because the excitement last week was all around an oral medicine that you make, but others come in different delivery forms. Is there going to be room for everybody in this space?
By 2035, approximately half of the world's population will be obese. So it's one of the biggest disease burdens we have in the world right now. And it's actually causing a number of other diseases, like, for example, also cancer can be triggered through obesity, but also kidney diseases, also neurological diseases. So we do believe that there is a lot of opportunity to change the standard of care with these medicines. On top, if you look at what we've provided in terms of data, we have really competitive data here. And these are the next generation GLP-1 GIPs. With the oral compound, we believe we can reach more patients around the world. And this is not a peptide like some of the other companies have. It's actually a small molecule. So we can scale much faster in terms of manufacturing. And with that, we can provide this to more patients around the world.
Thomas, speaking of kind of that exposure around the world, I want to bring it right back to some of the new governments we are seeing right here in the UK, in France, arguably a new one in the States as well in the next 6 months. That's going to put a lot of pressure on the regulatory systems on both sides of the Atlantic. I want to start in the States, though. President Biden, Kamala Harris as well, have made a lot of their campaign agenda around drug pricing, around kind of more scrutiny, specifically when it comes to kind of international pharmaceuticals entering the U.S. market. That could change in 6 months' time. How is Roche preparing?
Roche has always been very responsible when it comes to pricing, as we've also shown during the COVID-19 pandemic. And we believe that if you look at all the unmet needs, all the diseases that are not being treated well enough today, if you look into the future, preventing diseases, stopping diseases to progress, or even curing diseases, there's a huge opportunity if you bring truly differentiated and innovative medicines, and that's our goal.
Can I ask about the longer-term future of the business, Thomas? When you look ahead, say a decade from now, and we've talked a little bit about some of the areas of growth, but what do you think is going to be Roche's biggest market? What are you planning for when you plan out into the medium term?
When we look at our strategy, we really look at those diseases that have the highest burden on society and where there's the biggest unmet need. If you look at cardiovascular and metabolism, it's actually the #1 cause of death today, and it will be the same in the next 10 years. Oncology, neurology with Parkinson's, Alzheimer's, and other diseases is also a key driver. And immunological diseases, more are key driver of disease. And so we are really focusing on those diseases where there is a big unmet need and where we can help patients around the world.
So that's the long term. In the shorter term, Thomas, some of the analysts I was reading ahead of our conversation are talking about the stock, to get a re-rating of the stock, needing some better positive data from late-stage trials in various fields. What's the date we need to put in our calendars, put in our diaries? When are we going to get that?
Well, we've had a number of very positive results in the first half of the year. Alecensa in lung cancer, for a specific type of lung cancer, reduced death in the trial or recurrence of disease by 76%. It got breakthrough designation from the FDA. Inavolisib, a cancer medicine for a specific type of breast cancer, again, superb data, received breakthrough designation from the FDA and priority filing. So with the PDUFA date now being the 27th of November, so that's another great example. Columvi in sort of hematological cancer, again, delivered fantastic results. So we are delivering results. Now, if you look at pharma companies and really innovative pharma companies, it also means that not every trial is going to succeed, because then you wouldn't be innovative if every trial would succeed. And if you look at the whole pipeline, In the industry average, only 1 out of 10 medicines make it. So if you look at what we have delivered and what's going to come, I'm very confident that we will deliver a great new medicines and diagnostics to patients.
All right. Roche CEO Thomas Schinecker joining us this morning on a range of topics. We thank you so much for joining the program. Coming up, we're going to take a little bit of a break from the earnings palooza. We're going to macro this out a little bit because plenty of news coming out of Asia. A surprise lending rate cut from China's central bank, signaling intent to boost growth in the world's second largest economy. We're going to dive into the details next. Stick with us. This is Bloomberg.
Welcome back. This is the opening trade. We have 11 minutes to go until the start of European trade, and it looks as if we'll see some pressure, certainly on the French market. CAC futures are weaker. Could that be the luxury effect once again on the French market? Let's talk about the broader macro themes, though, because we've been very focused on micro so far with plenty of earnings to get through. Let's bring in Rachel Evans, Bloomberg's managing editor for FX and rates across the US and EMEA. Rachel, good morning to you. So let's talk about the markets in 3 minutes, and we are dealing with a handover from China that's actually quite interesting this morning. Some disappointment in various corners of the market last week and in recent weeks with a lack of policy action, or maybe policy action not living up to expectation from, for example, the plenary. And today we get a cut in one of the rates from the PBOC. What's happening here?
Yeah, so they're certainly making up for that disappointment this week by having the cut of the reverse repo rate earlier this week, and now this cut of this medium-term rate. So, I mean, really what's kind of going on now is that China has for a long time been dealing with a slowing economy and trying to figure out ways to boost that economy while not overly weakening its currency. The yuan is already trading near a pretty weak level. So really, it comes down to a matter of timing about how you then go about supporting your economy. Cuts are obviously supportive, but they are also something that would traditionally weaken the currency. But I was really interested in looking at the response of the currency today. The yuan is actually stronger today. And the reason for this is that they have been very strategic with their timing. They have waited for a moment where actually the other sort of currents within the currency market are quite supportive of the yuan. So, for example, we're seeing the yen having a huge bout of strength. That's helping pull the yuan along with it, and also encouraging people to unwind carry trades, which have also, as well as being funded in the yen, have been funded in the yuan. So that's been supportive of the Chinese currency. And then also you're seeing a relatively flat period for the US dollar. Now, given the Chinese authorities are very cognizant of some of the criticism of their weaker exchange rate that we've seen, particularly from the US and from former President Donald Trump, that's something that they obviously want to kind of try and keep relatively stable. So I think that's kind of why we've been sort of seeing this development coming out this week.
So you mentioned the yen as part of the partial Asia story. Let's talk more about that, because we are also seeing headlines come out of Japan that they proposed a record minimum pay hike at a time when they're talking about increasing the minimum wage, but also potentially hikes on the table with a 152 handle on dollar yen. What is going on at the BOJ?
Yeah, it's going to be very interesting. Their meeting is obviously next Wednesday, and there feels like there's quite a lot of trading minutes between now and next Wednesday. So the question I'm looking for is really sort of what extent do we see this current rally in the yen stretch and even overextend? I was looking at some of the technical indicators, relative strength indicator is something I like to look at, and we are, like, I think the most oversold since about 2020 when you look at the dollar-yen pair. So if we're thinking about how much more the yen can rally, it's going to be interesting to see whether it can push through this 152 to 150 level. There's a lot of support there. There's a lot of kind of interesting resistance levels that will help provide some kind of ballast to the dollar-yen pair on that kind of journey. But really the key is going to be what the Bank of Japan does next week. Do they hike?
Just briefly then, Rachel, yields are lower. You've got some former Fed officials calling for rate cuts sooner than previously expected. What's moving markets in Treasuries?
Yeah, so I think it's exactly that. We had William Dudley coming out yesterday and saying that he thinks it's time to cut. We've had Goldman Sachs saying July would be a lovely time to cut. The market thinks September is still the likely scenario, but that's really been moving Treasury yields around in recent days.
OK, Rachel, thank you very much. Rachel Evans, Bloomberg's managing editor for FX and rates across the US and EMEA. Kriti, let's talk a little about Anglo-American, because we're going to be watching a number of, watching all stocks to see how they move at the open with all of these earnings coming through. But a number of stocks in particular in focus, and Anglo-American in focus. They've just been doing a call, I think, management, ahead of a conversation with our colleague Tom McKenzie.
Yeah, he has. And look, the focus has really been about how they're going to restructure, how they're going to streamline some of the business. They are fending off, of course, that $49 billion bid out of BHP as well. But it looks like Duncan Wanblad, the CEO of Anglo-American, speaking on that call, as you said, saying he'd like to see the coal deal done by the year end. That was one of the potential spinoffs that they were talking about. The sale would still include the Grosvenor mines, of course, comes after the fire as well. But the plans to go ahead with that sale of their coal business seem to be on track. Of course, we are going to be hearing from him directly. He'll be joining Tom McKenzie in just about 10 minutes' time over at the London Stock Exchange. So a really interesting conversation that we have our eye on.
Yeah, absolutely. So we'll keep an eye on Anglo-American. Of course, the big fight back against that BHP takeover and all the restructuring that goes along with that, the big picture conversation. And Tom will be taking us into that. Plenty of other earnings stories to watch. I'm seeing some some suggestions that Kering's going to be down quite heavily at the start of trade. So another day where luxury and the negativity around luxury in China could be in focus, and that no doubt will weigh more broadly on the French market as we head towards the start of the Olympics. That's tomorrow. Coming up, though, we'll have the market open for you. That's in around 5 minutes' time. This is Bloomberg. Welcome back to the programme. 2 minutes away from the opening trade, and let's build up to that opening trade by recapping some of the earnings stories we've had and looking back at the session of yesterday for any clues. I'm not sure, Kriti, whether this does hold clues because of the number of earnings stories that we've had out, but if it did hold a clue, it would be that we would expect to see some weakness at the start of the European trading day, because after the European markets closed, we saw continued weakness coming through on US stocks. So that's the bigger macro picture. In terms of where we are on the individual stock names, Lizzy Burden's joining us this hour. She's going to take us through some of those individual movers and what to expect in just a moment. But we've had mixed signals from the auto sector, a better story out of the drugs makers, and a weak picture coming through out of luxury then, Kriti.
And that's already showing up in the futures picture. And I think although we're trying to roadmap what that graph you just showed really indicates for the futures picture, it actually helps when you look at the S&P futures, higher by about 0.1%. The idea that perhaps that weakness in the States means that there is a little bit of buying the dip. But you are right, Anna. The pain that you were seeing in the earnings picture, specifically in luxury, given those heavyweights already showing up in Euro Stoxx 50 futures, down 1%, the FTSE 100 on that same page, Lizzy.
Health of the consumer very much in focus in our stocks to watch this morning. Keeping an eye, as you say, Anna, on Unilever. I was there speaking to the CEO just minutes ago. Sales there rising less than expected in the second quarter as he tries to get his turnaround plan off the ground. You've had Nestle downgrading its sales outlook for the year as well, and Stellantis too seeing earnings plunging in the first half of the year. But Anna, we'll keep an eye on all of them at the open.
Yeah, absolutely. So plenty of individual names to watch. You've been through some of the drugs movers that we could see in focus. Roche and AstraZeneca speaking to us about the boom in obesity drugs just in the last hour. We'll watch that sector in particular, but we really will be watching the luxury space and see how much weaker that can go in Paris. So let's get these markets open then here in Europe and see whether we get that read across in the United States, which gives us some downdraft. The movers, the individual movers reflecting the underlying earnings stories, of course, will be something we focus on as well. The FTSE 100 then, the first out of the gates, and it is undecided, it would seem. Went a little higher just to start with, but now down by around 0.1%. The IBEX in Spain also one of those early movers usually, and that is to the downside, down by around 0.8%. The FTSE 100 worsening a little bit, down by 0.5% this morning. Some of these earnings stories have not been positive, and even when we've had quite mixed performance by a sector, I'm thinking here about the auto sector, some of the opening calls have suggested we see weakness across the board, so we'll wait to see what that delivers. FTSE MIB then down by 0.6%. Still waiting for the DAX to open, still waiting for the CAC 40 to open. The CAC in particular really important for us in terms of the luxury story. We had those numbers out of Kering that were really weak overnight. Further bad news coming through on Gucci and the toll there on the parent organisation, of course. Kriti, take us through a deeper dive as we wait for the DAX and the CAC to get open this morning?
Well, you highlighted the negativity. I'm going to go to the positivity, at least in here, because one of your major movers right off the bat when you look at the FTSE is going to be Unilever there. We're going to dive into the details in a moment, but shares already higher by 5% right at the open. We've also got that biotech outperformance. We just had conversations with AstraZeneca, with Roche as well. It looks like Roche, AstraZeneca, and Sanofi, I'm going to throw in there as well, all higher and lifting the entire market. But when you do look to the downside, and of course, we are still waiting for some of those opening trades to show up in, it looks like the luxury space as well. You are going to see perhaps some weakness. Remember, to your point, we did get Kering weakness as well. This follows a second story that we got out of LVMH earlier in the week. You also have ASML, which is dragging the index lower. And I'm curious how much of that is a tech overhang, Lizzy, from what we saw over in the States.
Yeah, I would just point to Nestle shares lower 3.4% currently. So the absolute flip side to Unilever, even though you actually saw both of them delivering quite negative results, actually, Unilever saying that sales rose less than expected, as I say, in the second quarter. But as you look to the sectoral breakdown, you've touched on AstraZeneca and Roche. You've got healthcare up 0.8%. So it's the second fastest growing sector this morning when we look across the stock 600. The bottom of the basket, tech down 1.7%.
Yeah, in terms of that sector breakdown then, there really are most sectors in negative territory, but Kriti, you're right to point out we do have some areas of positivity. Personal consumer discretionary goods is up by around 1.2%. And Unilever lifting some of the others in that name, even though the Nestle story does look a little bit different. I guess we need to wait to see what's happening with the auto sector, because this is a really interesting one. We've had some better news out of some in the auto space, the likes of Renault. We'll see whether that's rewarded in the share price, though. We're having to wait a little bit to get some of those auto names open. We'll do that shortly. Let us, though, go back to the basic resources story. We've had numbers out of Anglo-American this morning. This is a business that's been fending off a takeover offer, as we know. Let's get to our colleague, Bloomberg's Tom McKenzie, who is at the London Stock Exchange with the CEO of Anglo-American. Tom.
Anna, thank you very much indeed. Yes, Anglo reporting underlying earnings of just shy of $5 billion. It's a 3% drop from a year earlier, but it is beating the estimates and the expectations. Very pleased to say, as you say, that I'm joined by the CEO of Anglo right now, here at the LSE in central London, Duncan Wanblad. Duncan, thanks for joining us. Of course, we want to unpack the results, but I also want to start by asking, because this is the first time you've done a TV interview since that BHP bid, the $49 billion. Given what's happened with copper prices, we're now back below $9,000 a tonne. Diamonds are looking a little soft. You've had the issues around the coal part of the business in Australia at Grosvenor with the fire there that's affected production. Any regrets, Duncan?
No, absolutely not, Tom. No, none at all. I mean, the company that we're creating here is going to be extremely exciting. And I think we will absolutely get a completely different valuation for it compared to what it looks like today. You know, we're daylighting, some of the best copper assets in the world. We've got this highest quality premium iron ore business, and then we've got this optionality in our Woodsmith project. You know, all of that is a much simpler, much more robust portfolio. And I'm really excited about moving through this change that we have to get through to get there, and then building from that platform going forward. So absolutely no regrets at all.
It's been a bit of time, of course, since that BHP bid and since you rebuffed it, $49 billion. What have investors been saying to you in the near term around how you are thinking about the restructuring?
Well, look, investors supported the strategy that we laid out for them in May, and are very keen to see it done.
Are they still supportive?
Absolutely. I think at this particular point in time they are. It's only been 2 months, and I think what they really want to do is see us get it done. And that's what we're focused on doing. So, we've got all 4 of these processes in play right now. Very optimistic that we'll get them done by the end of next year, and then get that reset and move forward.
So let's go through some of those processes. Is 6 months as a time frame realistic for the coal unit that you want to spin off? Grosvenor, affected by a fire, you've had to close down production at that Australian unit. Can you do it in 6 months? Can you sell it in 6 months? Or investors looking with less appetite at that asset?
No, well, we had very, very strong interest going into just after the announcement, the coal business. Our coal business is characterised by some of the best quality coking coal assets in the industry. And post the fire, many of the bidders, almost all of the bidders, reconfirmed their interest, even with Grosvenor in the package. And so, after lots of consideration in terms of understanding, what the situation is on the mine, we worked with Dan and the team. He's the chief executive of the business in Australia. And on the back of that reconfirmation of interest and very material interest by the buyer group, we've decided to carry on, and we're going to include Grosvenor in the package during the
Okay, you're going to include it in the package?
In the package.
Do you think you can get it done in 6 months?
Yeah, I think it's relatively realistic given the strength of the interest that we've got to get through a two-stage process in about a 6 months period of time.
Let's talk about diamonds. You've cut production in terms of diamonds. There's softness in that market. Prices have come down. What are you looking for when it comes to the diamond market before you have the confidence to say, OK, we're ready to put De Beers up for sale?
Yeah, look, I mean, diamond markets are particularly soft at the moment, and a lot of that's led by what's happening in China. China is very weak right now. Hopefully, some of the stimulus that we're starting to see come back into China does help us in terms of the timing on the divestment. So this, of course, I'd love for the markets to be a lot stronger moving into a divestment. But in De Beers, it's a great business with some fantastic assets as this iconic brand. And I think that people who are going to buy it in the context of if there was a trade sale for it probably understand how these sorts of markets work. And, when you get to bottoms of cycles like this, it's very, very painful, but they recover very quickly and then they return very strongly. Are you
at the bottom of the cycle, do you think?
Or I'd like to think we're at the bottom of the cycle, Tom, yes. This is all the characteristics of bottom of cycle for diamonds. So on that basis, I think that we're going to carry on. But we're running a dual track on De Beers, which is the possibility of a trade sale or a listing/IPO for it.
What's fair value for De Beers?
Well, fair value, I guess, is what a buyer would pay for it. And I think, depending on where we are in the markets at any one particular point in time, is how the markets will value it. So we'll have to just take that as it comes during the next couple of years.
Look, you touched on China a couple of times in terms of the stimulus story, in terms of that picture when it comes to diamonds. When it comes to copper back below $9,000 a tonne, are you still convinced that the renewable story, that need for base metals, longer term, is still there? How are you thinking about the softness in copper when that market turns around?
Yeah, copper's a very emotional metal, Tom. I mean, for some reason, it will react wildly to sentiment on the day, but the long-term fundamentals for copper are astonishingly good. So what would you have to believe for there not to be a good copper story as far as the transition is concerned? Well, you'd have to believe that climate change was bogus. And I just can't, for the life of me, think that there's any truth to that at all. So this must happen. And in fact, the longer it takes, the more uncertainty that's created in the short run makes this problem for copper even bigger at the end of the day, because copper needs investment to get the volumes out to supply the material that is required for this transition. And this transition needs to happen. It's time bound. This is what the science is telling us. So I'm very convinced.
Do you have a view on pricing of copper by year end?
Well, by year end, that's very short.
Okay, pushing out to 2025. Let's push out to 2025. Does China come back? Does copper get back above 10,000 next year?
My sense is it probably does, yes.
Okay. You took an impairment. We're thinking about the UK right now. It's the Woodsmith fertiliser plant here in the UK. You've had some challenges there. You took that impairment. Is that done? Can investors be convinced that you're done on that side, or is there potentially further pressure coming through from that business?
No, well, the impairment is a function of us slowing the project down. So, that it was inevitable on the day that we announced that the project was going to be slowed down, that we would have to take the impairment based on just the time value of money of the investments that we've made in it today. I mean, what we are doing is continuing the development of the feasibility study of that project. So we're still actually driving one of the shafts down through that very tricky Sherwood sandstone area. We need the data from that to complete the feasibility study. We're doing the technical work. When that's done, and I'm expecting that most of the studies are going to be done that would be able to support both a syndication and an investment thesis early next year, we will need to have done the transition of the vast majority of the program that we discussed earlier and put the balance sheet back in shape to be able to do this. So in another couple of years, we would be thinking about restarting that project in earnest.
OK. On iron ore, prices down almost 30% year to date. RBC, Berenberg say that iron ore prices could fall another 15% in the coming year. Is that a picture that aligns with your internal analysis?
Yeah, everybody's always had iron ore in backwardation for as long as I can remember, and it generally tends to perform a little bit better than everybody expects that it's going to do. But certainly in the context of what the world needs as far as iron ore and steel is concerned, I'm relatively confident that at least the assets that we've got will provide and perform very strongly into that market, irrespective of where it goes in the short run.
Okay, and I want to move on to Platinum. Amplats, of course, as the shortened name is known in terms of the South African business, in terms of Platinum. So they put out a view that first half earnings could fall as much as 25%, so they've been cautioning on that front. What would you need to see within Amplats to get that to a point where you could put that up for offer as well?
Up for offer as in up for sale?
Yeah, or turning it around? Is that what are you looking at in terms of Amplats? What's the plan?
Well, the plan for Amplats from our perspective is a demerger, so we're on with that, and that's going to happen during the course of next year. As far as the business is concerned, again, characterised by some of the best assets and an integrated process division, and it is running a bit of a turnaround at the moment, without a doubt. So, they've had to redevelop mine plans for Mogalakwena, which is a big open-cut mine, and redevelop all the mine plans for the underground at Amandelbult. We are now starting to see that turnaround starting to come through. Some good performance at Mogalakwena and some pleasing performance, certainly in quarter two, on the production coming out of Amandelbult. What they're very focused on is reducing their costs within the production that they're forecasting based on on where the markets are today. But we are very confident, as are they, in terms of what's going to happen to this market in the short to medium term. Right? I mean, the fundamentals of it, again, also led by energy transition. And mobility cleanliness are very good for the business.
Duncan, you have to navigate politics with this business. The politics of South Africa, the politics of the UK. Now, of course, we're thinking about the politics of the US. And potentially, if a Trump administration comes into place, and it's still an if, of course, potentially 10% tariffs on all goods coming into the US. How are you thinking about higher tariffs and what kind of risk that poses to the business?
Yeah, look, we'll have to take that day at a time. Our cost base is our cost base, and we're continually focused on optimising that. I'm pretty sure, though, that the minerals that we produce are very good minerals for the world, and they need them. So even the United States is very focused on its own critical mineral policy. It's very keen to work with companies that produce the right minerals in the right way. And so on that basis,
do you think does it compel you to do more on cost?
Does it compel us to do more? I think we're always compelled to do more on costs, irrespective of what tariffs are in place anywhere in the world. I think that's one of our fundamental and primary jobs, actually, is to be sure that our cost base is well in check and that we're producing as effectively as we can.
Okay.
So, it's not something that I would have to change focus on in the business because it's already a primary focus for
Duncan
us.
Wanblad, thank you very much indeed. The CEO of Anglo-American. No regrets on rebuffing that $49 billion bid by BHP. Guys, back to you.
Bloomberg's Tom McKenzie there over at the London Stock Exchange with the CEO of Anglo-American talking about how to reposition that company. And Anna, Lizzy, the shares are down about 0.8% as he was speaking, really given more of those details around what that company actually looks like, really saying that, look, the coal business and that spin-off is on track.
Yeah, absolutely. So that's the Anglo-American story. We'll certainly keep an eye on that. We are watching Anglo. We're watching a whole host of other sectors this morning. Anglo-American shares down by 1.1% this morning. Let's turn our attention to the consumer products story then. We talked a little bit about Nestle. Those shares down by 4.5%. Unilever shares, though, on the other hand, really soaring today, Lizzy. And some of the lines we went through earlier, the underlying sales numbers coming in at 3.9% up. That was a disappointment versus the estimate. But actually, that's being taken by quite well by the markets.
Yeah, indeed. So you had the sales at Unilever rising less than expected, but you did see more positive news on the buyback. This is for the second quarter. The CEO getting his turnaround plan off the ground, or failing to. I spoke to him, Heinz Schumacher, just a short time ago.
Last year, we announced in October our growth action plan. We're very focused on driving a healthy top-line growth, consisting of volume growth, mix growth, and a bit of pricing, of course. And at the same time, expanding our gross margins, which will allow us to invest behind our biggest brands. And if I look back on the first half year, that's exactly what we're doing. So we did realize the third quarter of higher volume growth, so we're happy with that. Clearly, pricing moderated a bit, and that was on the back of lower inflation in our main commodities. And of course, when we can, we want to give back to the consumer there. And then at the same time, our margins did expand quite substantially. So we're quite well on the way in the execution of that growth action plan that we talked about.
Well, on that pricing story, of course, in the cost of living crisis, we saw consumers switching to consumer brands. We've had Nestlé downgrading their sales outlook for the year this morning. Are you winning back that market share now?
Well, we kept the guidance for the year on the top line as it is, and as we've talked about already in the very beginning of the year. We are, as I said, we're expanding our gross margin. So we've increased our guidance a bit on the profitability side. And when it comes to competitiveness, that is not yet where it needs to be. So we will continue to look for improvement there. And I do expect improvement in the second half. And this is quite consistent with how we've been talking about competitiveness since the end of last year.
Well, as you look towards that second half, how would you describe the health of the consumer? Of course, we're expecting rate cuts as well.
Yeah, I mean, if I look at the consumer, it's not one size fits all. So would need to make a very short detour around the world. If I look at China, we do see some slowdown in the luxury side of things. I mean, in the premium sector. But in the more mainstream, and this is where we lead, and for example, hair care, but also in our nutrition business and our home care business, actually our China business has performed quite well. If I look at the US, it's a bit similar. You know, the prestige beauty side of our business, and that's really the higher end. There we're seeing a slowdown, consistent with what others have said. But overall, North America has held up quite well. We've seen healthy volume growth and a bit of pricing as well. If you then look at the rest of the world, I would say it has not seen a material change in consumer behavior.
So they're the regions. Let's talk about those units. We've got to talk about ice cream, of course. You've said in this earnings statement that the separation of the ice cream business is on track for the end of next year. We, of course, had reported that you were planning a sale or a spin-off of that business. Is it still a dual-track process?
Well, we've said when we announced the demerger of ice cream that a demerger is the most likely route that we are going to take. And we are fully focused on making that happen towards the end of 2025. So, you know, there will undoubtedly be other speculation. And I've also said, hey, we're open for other options if they come to the table. But from our end, we're 100% focused on making that demerger happen.
So that was Heinz Schumacher, the Unilever CEO, speaking to me earlier. The share's currently up 6.8% compared to Nestlé, down 3.8%. I thought it was really interesting when he took me on that tour around the regional businesses of Unilever and referring to that luxury weakness in China that we've heard from other companies this week, LVMH in particular, but actually saying that North America is holding up pretty well. And of course, we had to talk about ice cream and all the plans for separating off the ice cream unit. Talking about the nutrition unit, though, further streamlining, but not the breakup that we were expecting. So a bit of a surprise there, actually, for those who are very, very close watchers of Unilever. OK,
but I thought it was really interesting the way that, as we mentioned, going into that conversation there, into that interview, that despite the fact that they missed to some extent on the top line, they seem to be rewarded for margin, but rewarded for the volume as well. Yeah. And that's where the contrast with Nestlé is, because there they had a history of maintaining the prices but not the volume, and here we see a different story at Unilever, and this seems to be what the market is looking for.
And to your point on Nestlé, now you're seeing them cut their sales guidance for that very point. The volume isn't showing up. Sales growth at 3% versus a 4% estimate. And I think the concern here, I'm just going to macro this out for a moment, is that there is concern the consumer can no longer absorb that pricing. If you are hiking up prices, which has been the theme of the last, I want to say, 2 or 3 years, in consumer products and luxury products, consumers can digest that because they had stimulus payments, they're doing wealthier, a little bit better, their wages are rising relative to what they were, and now maybe we're coming to the tail end of that.
And to bring it back to the micro, it's testament to Heinz Schumacher that he's riding that wave. You know, he's relatively new at Unilever, but he's taken a different approach to Nestlé, and we're seeing it in the shares this morning.
OK, we'll continue to monitor these earnings stories. A really big day for earnings reports out of European corporates. Lots of other sectors to break down. We'll get to the auto space, pharma, luxury. It all adds up to negativity, it seems, across European equity markets. We are down on the Stock 600 by just over 1%. The CAC 40 taking the worst of the hit, down by 1.5% this morning. This is Bloomberg.
Welcome back to the opening trade. We're about 23 minutes, we'll call it 24 minutes into today's session. You are seeing red across the screen, red across Europe. This is really an earnings palooza that just keeps getting worse and worse. A couple of green on the screens, but the heavyweights really not working in the favor of the broader markets here. You are seeing the stocks 50 down about 1.3% this morning. The FTSE 100 down 0.8%, but a lot of the pain on the continent showing up in the French and the German indexes. I think we can attribute a lot of that to luxury and to the auto space as well. Let's get a quick check on the sensational six. I'm putting my Guy Johnson hat on here because you can really see my point on the heavyweights across the board. When you do look at Novo Nordisk, which I think is the one I want to zero in on here, seeing a 1% decline, but then you have Schneider Electric down a whopping 4%. Same with the Nestle story. We just talked about that consumer angle hitting both LVMH, Ferrari as well. Even ASML isn't that safe haven in a sea of red, but Novo I think is the relative outperformer, and even that stock, Anna, is down 1%.
So let's go from Novo to the rest of the pharma sector then and have a look at what's going on there, because we actually got upgrades to guidance from both AstraZeneca and Roche, but they're not both having the same impact on markets this morning. So AstraZeneca down by 2.4%. Roche, on the other hand, doing pretty well, up by 2.5%. Roche raising their annual profit forecast. New drugs with the story there. That was something that was buoying that market. So a mixed performance really coming through on European pharma.
Yeah, and when you look at the car makers, a mixed performance as well. You had Stellantis earnings plunging in the first half of the year, and those shares lower 8% more than currently. But Renault reporting its highest ever profitability in the first half, benefiting from those low raw material costs. And Renault shares actually, have we got them there, lower at 7.7%.
Which seems kind of strange, doesn't it?
Yeah.
When you looked at the contrast in our reporting around Renault and Stellantis, Stellantis seemed to be a pretty negative story. You know, even the CEO apologising for the performance, saying this isn't as good as we expect. Industry and company-specific factors to blame, he was saying. And then you look at the Renault story, and they're talking about a much more positive dynamic, saying they'd had healthy inventories, unlike the big inventories we'd seen at Stellantis. Renault saying that the demand was there for higher trim versions, which suggests pricing power. And the CFO now saying we're sticking to our guns on pricing. It just feels strange that we're seeing both of those respond negatively. And I know we'll get some analysis on this sector coming up shortly on the programme.
Yeah, I know Earnings 101 is always about margins. And the fact that Renault is actually talking about lower raw material costs is also key to that entire equation, as you were pointing out. But the highest ever profitability, you would think that the market would reward that. And to your point, it hasn't. I believe we have a Stellantis interview in later programming over in the States during U.S. hours as well. So I imagine this will come up because one of the big issues, speaking of margins for Stellantis, has been that weakness in the wages as well.
Quick mention of Universal Music Group in the music space, as the name suggests. That stock really down heavily in Amsterdam. Some of the analysts saying that the results beat on revenue and profitability, but there was real weakness in subscription streaming growth and a meaningful miss in ad-supported streaming performance. So all of that adding up to enough to send the stock down by 27% right now. A host of downgrades for that stock across the street this morning.
Yeah, a lot to digest there. Coming up, we are going to be talking about that kind of weird dynamic we're seeing in the European car makers. One manufacturer reporting a record first half profits, the other falling short of estimates. We're going to dive into the divergence next. This is Bloomberg. This is the opening trade. We're at 30 minutes into today's session across Europe. You are seeing red across the screen. Pick your market, and you are seeing it underperform. I think biosciences might actually be the one outperform, but even then you are seeing spots of weakness across the board. But I think one of the big sectors that's really taking a hit is going to be in the auto space. Stellantis shares, for example, tanking this morning after the car maker's earnings plunged 48% in the first half. They're forcing the company to bring back old models after its new lineup failed to impress U.S. customers. Even in the same vein, you're also getting numbers out of Renault as well. A positive story there, and yet the stock also tanking. Let's see what's going on. Bloomberg's Craig Trudell, who heads up our global auto coverage, joining us this morning. All right, so two different stock stories, two very similar stock results. What's going on?
Yeah, I think the move in Stellantis is not a particular surprise, given that these results are really weak, and it's across the board. Regions, product lines, brands. I mean, this is a company that's in a bit of disarray. We've seen a massive executive exodus the last few months that has not been particularly, reason to be inspired. And so to see these results sort of come home to roost is not much of a shock. But with Renault, I think, while the returns are positive and honestly better than we've ever seen them, we're also not seeing this company grow. They're managing these strong margins on lower volume, and so I think we've seen the shares of Renault move up quite a bit. So we may see a little bit of profit taking, and also look at their peers and saying, goodness, this is tough sledding. I don't know that they can keep this up.
So those are two stories that seem to be different, but as Kriti says, having the same or very similar market reaction. The two companies that maybe are telling slightly more similar stories, Stellantis and Nissan. Nissan lowering its profit outlook on US inventory. That area of US weakness seems to be a theme. What ties these two together then?
I think it's really interesting. A few years ago, when everybody was making money hand over fist on the basis of being production constrained, we heard so many executives come out and say, we're not going to go back to our old ways. We're going to keep inventories in line because it's better for us. We're going to make more money this way. We've seen, sort of a case of, boy, how quickly times change, right? When everybody is able to make as many cars as they used to in the past, they're going to make as many cars even when they get out over their skis in terms of demand not keeping up. And so we're seeing that very consistently at Stellantis and Nissan in particular. Inventories way high, back to where they were before the pandemic. That's going to hurt profitability. And, I would not be surprised to see, shifts taken out, job cuts happening at plants. And maybe they look at whether or not certain factories maybe even need to close.
What about for the Ford-Renault connection? Of course, we had the Ford results last night, missing on profit. They're saying quality problems are there with its vehicles, leading to this surge in warranty costs. Do you see a tie between the two? Do you see a tie between the supply issues at Ford and at Porsche as well?
Yeah, the quality and warranty, I think, is a very unique Ford story. And Keith Naughton in our Detroit bureau had a great story just in the last few weeks about the issues that they're trying to solve there. I do think one of the things that really ties Renault and Ford together is they both took this very interesting approach to, let's split up our EV business from our combustion car business and see if we can really sort of build a team around this transition that we need to make. That's proven to be probably a flawed strategy given how consistently we've seen it not work out for companies who have taken that approach. Renault even was going to try and list its EV and battery business. In retrospect, it's a good thing that they didn't try to do that, given that the story is not a very positive one to tell, not just for Renault, but for the industry at large, that we're seeing growth really decelerate and concerns about whether or not this transition is going to be smooth.
It's really interesting, and I want to bring it full circle right back to the Stellantis question as well, because Stellantis has been dealing with a lot of wage issues. Ford has been dealing with a lot of wage issues over in the States as well. One of the big kind of pieces that helped Renault's numbers, or at least numbers that is not being received well by the market, is that their margins are simply lower raw materials. Are wages a bigger issue right now? Are supply chains a bigger issue? What's the hiccup here?
Yeah, I think raw materials, especially within EVs and batteries, that maybe is a bright spot. I think there is a concern about how much the U.S. players are able to take advantage of some of those raw material cost downs, in the sense that, the U.S. is really trying to force companies to, take China out of its supply chain. So we're seeing a lot of the reductions in costs driven by the fact that raw material prices are down. Chinese companies have built so much capacity that they've really built an advantage for themselves. And, Washington does not want to see these companies reliant on Chinese suppliers. And so they're really sort of cut off from that benefit that others in the sector are able to take advantage of. I do think, labor, of course, just last year we did have the UAW contract negotiations, and there was a big concern about just how much was won by the union. I don't think we've necessarily heard GM or Ford or Stellantis really point to that as being a major, strike against them. But I can't imagine it is particularly helpful now that we are in a period of tougher sledding for the industry.
Craig, just to give us a little bit of perspective on what we're seeing here, and this is a wider story than just cars perhaps, but it does feel as if today is telling us something quite negative. from different parts of the globe. So the China story and slowdown there maybe isn't new. Tech sell-off, that's not a new theme. We've been dealing with that given the strong run-up we'd seen earlier on in the year. But weakness in the US economy and what you're telling us about job losses around car producers, this is starting to sound like something that could build. We're seeing the bond markets taking this quite seriously, it seems, with expectations being brought forward a little at the margin, I think, Kriti, for when we get those rate cuts. And we're seeing demand for bonds this morning, yields coming down. I mean, how big a story are we talking about in terms of the car space and the negatives that you're setting out here?
Yeah, I mean, I think, stepping back, this was an industry that, really was able to take price again when we were in the constrained period. They were taking price to a significant degree, and we knew that that was not going to be sustainable, right? The question was how far prices would come down and how fast. And I think, if anything, I've been, surprised that we've been able to maintain a stronger pricing. So I wouldn't necessarily say that we're in a real sort of state of disaster for the industry by any means, and demand is actually, fairly strong in the U.S. I think what we're seeing is pricing pressure like we haven't seen for quite a while, dating back to before the pandemic, and a case of companies needing to take some medicine here because they got over their skis in terms of too much, bringing too much production back and trying to maintain that strong pricing. You're going to have to make some decisions of where you give up.
All right, Craig Rizal, who heads up our Global Autos coverage, we thank you for that analysis of the very many earnings we're getting across the autos picture this morning, Kriti.
Yeah, it's a really interesting dynamic. Of course, we're going to hear later from Stellantis CEO. We have an exclusive interview with them. They're going to be joining our colleagues on Surveillance at 12:15 p.m. UK time, really following some of this market sell-off that you're seeing, not to mention some of the internal dynamics of the company itself and the broader relationship with China that Craig was just talking about. In the meantime, we want to talk about the weakness in the auto space. We want to also talk about how some of these pharma stocks are performing as well. We had some great sound coming out of AstraZeneca, Roche, even Sanofi is outperforming in a sea of red. These are three companies that are really kind of expanding their pipeline, expanding into the obesity story. Take a listen to what they had to say.
By 2035, approximately half of the world's population will be obese. So it's one of the biggest disease burdens we have in the world right now. And it's actually causing a number of other diseases.
Our strategy will not only be for monotherapy, but also for combination therapies and doing these sort of fixed dose combinations, which are able to help patients with not just weight management, but the underlying disease as well with these comorbidities.
With the oral compound, we believe we can reach more patients around the world. And this is not a peptide like some of the other companies have. It's actually a small molecule. So we can scale much faster in terms of manufacturing. And with that, we can provide this to more patients around the world.
All right, the Roche CEO and the AstraZeneca CFO speaking to us earlier on this show, talking to us again about how obesity really plays a role in some of their pricing. We attribute it so much to Novo Nordisk, and then we have to really talk about how some of these other companies are actually getting involved in the mix. What does pricing mean, and how does the regulatory picture on both sides of the Atlantic, not to mention globally, actually help out with that picture? In the meantime, a quick check on some of the pricing here, because AstraZeneca, even though coming out with some of the good numbers, is actually weaker as well, down about 2.3%. And it's not the only ones. Anna, Lizzy, we've got several on the consumer front as well.
We've talked a lot about margins this morning, and for Unilever, that was one of the positive bits of news from them, despite some of the more negative news elsewhere. But those shares up 6.1%. On the flip side, you've got, as you say, Nestle lower 4% on a more broadly, more obviously negative set of results. But as we look across that corporate space, Kering, we've probably had those results overnight. The Gucci turnaround struggling, and they're low at 7.8% this morning. Again, sharing, however, the weakness in China on the luxury front.
Yeah, absolutely. And they were sort of early into this crisis, which is what was going on with Gucci, and they put in a new designer there to try and turn things around. We'll see if that manages to do so. So Kering down by 7.9%. A quick check on Universal Music Group as well. It seems as if this one really blindsiding the analyst community. A lot of downgrades on the back of this, and this listed in Amsterdam, of course. The stock down by 28% right now. Streaming disappointing, revenues from that and ad revenue disappointing, even if some of the other top-line numbers were not so bad. But that's certainly shaking markets over in Amsterdam.
Coming up, don't miss our interview with the CEO of Lloyds Banking Group, Charlie Nunn. That's coming up next. Plenty to talk about. This is Bloomberg.
Welcome back to the opening trade. 44 minutes into a sell-off this Thursday. We see European stocks on the back foot, a host of earnings stories that have disappointed. The Stoxx 600 down by 1.2% this morning. Let us go now to the UK banking sector and to Lloyds Banking Group, which has reported numbers this morning. That stock down by 1.5%. But as I say, plenty of other companies on the back foot this morning. The stock is, as I say, lower. The lender posting second quarter pre-tax profit that beat estimates. The CEO of Lloyds Banking Group, Charlie Nunn, is with us this morning. Charlie, very nice to have you with us. So it's a bit of a down day for stocks globally, or for European stocks, I should say. So within that context, let's dive into what you're reporting. So the numbers for the second quarter look to have come in much better than expected. Some of that is, of course, because your impairment charge is much lower than you'd been anticipating, so expecting fewer loans to turn bad, I suppose. So that's all very good, but what kind of message, because you're sticking to overall guidance, so what kind of message about your performance does this communicate to the markets?
Well, morning and thanks for having me. Yeah, we've announced a robust set of financial results today, very much in line with guidance and consensus. This is a really important year for us. We're in the middle of our 5-year strategy and the results for Q2 are robust. I think the second message, which is good, is we're seeing growth in the business in line with our growth and innovation strategy. We saw 5 billion of new savings deposits come into the bank in Q2, over 4 billion of new lending, and we've seen growth in market share in a number of areas. So that's really important. And that's given us the confidence to reconfirm both 24 and 26 guidance, but also increase our interim dividend 15%. So good news for our shareholders.
OK, and just a bit more on those provisions and the fact that you haven't had to take provisions to the extent that the market had expected, Charlie. Does this tell us a very positive picture about the UK consumer, about mortgage markets, the UK economy? What positive message do we take from that?
Yeah, so we've said actually for a while now, we see the economy as very resilient, and we're seeing our customers as really weathering the challenging last few years, but really this year is showing more resilience. And it's across the piece. We're seeing improvements in resilience of our mortgage customers. Our consumer borrowing businesses are performing really strongly and better than our expectations this year. And then businesses as well across the UK. So there is good resilience in our customer base. It's slightly beaten our expectations. We did also have some releases within those numbers, but underlying performance is good. And business confidence remains strong in the UK. Now, we are still only guiding to less than 1% GDP growth this year. So we start from a resilient place, but we're not yet seeing kind of the investment and the change in the trajectory of the UK economy. And that's one of the things we're very focused on.
Well, Charlie, I hear you were hanging out in the number 10 Downing Street garden recently with the new Prime Minister. Over time, then, do you think that he can hit his 2.5% growth target? And how long will it take to get there?
Well, I think the starting point is we welcome the new government's focus and their primary mission focus around economic growth and development of the UK more broadly. We agree that that's the way to unlock the improvement for all of our communities across the UK over the coming years is getting growth going again. And then the focus of this new government on really looking at some of the supply side changes that need to be made. You know, planning is a great example, or looking at connectivity in the grid and starting to look at housing differently. And so those are the priorities we have, is really working in partnership with the government to make those things happen. At the moment, our baseline forecast for the economy, as I said, is about 0.8% in GDP growth this year. And at the moment, growing up to about 1.4, 1.67% in 25 and 26. And that isn't meeting that 2.5% growth target. But we do think leaning into some of these opportunities for unlocking growth and then getting investment going, there is an opportunity to increase the pace of growth in the UK economy.
Well, on that, do you take Keir Starmer at his word when he says that there isn't going to be a windfall tax on banks, or are you planning for it just in case?
Oh, look, that's a decision for the politicians, and obviously you've heard the statements from the government so far, and that'll be a political decision going forward. No, that's not our focus. Our focus is really, as you know, we're the largest financial service group supporting the UK economy by a long way. And our purpose of helping Britain prosper is very aligned with supporting the economic growth and the improvements in the economy across all sectors, whether it's individuals, households, businesses, or international corporates trying to invest in the UK. That's our focus. And it seems at this stage well aligned with the new government.
Well, just going back to mortgages, we've seen the two-year gilt yield at a one-year low this morning. Bets on Bank of England rate cuts picking up. We've got a decision next week, of course. Your peers have been cutting mortgage rates in recent weeks. I think HSBC's cut mortgage rates 3 times in a month. When can we expect the same from Lloyds Banking Group?
Well, actually, we've been the same. We're very dynamic, and we have a 5-year mortgage at around the 4% range, which I think is, as in the rest of the competition in the market, is up at the top of the market in terms of pricing. The key thing, I think, around mortgages, as you know, customers are choosing still to lock in a mortgage rate for 2 or 5 years. And that's meant that this year we've had rates around that 4% available for customers, even though the base rate's at 5.25%. So we're protecting customers today. Obviously, as we look forward, we are predicting in our guidance to say that base rates will probably, over the next couple of years, only trend down to about 3.5%. And we will be pricing off the forward-looking curve. So we do think there'll be stability unless there's a change in expectations around mortgages and mortgage pricing. It's a very competitive market. And as you know, we're the leader in that market, and we really gained some good share of flow in Q2. So we're very comfortable with the services we're providing to customers and our ability to compete.
Charlie, I want to build on that story of kind of the local economy as well. We know that Lloyds has announced plans to shutter some of the branches across the country as well. We also know that the FCA, from a regulatory standpoint, is trying to push for more branches and more of that local banking story. How do you square the two? Are you going to be reviewing that policy?
Well, I mean, the starting point is we've got by far the biggest branch network in the UK today. We have over 1,000 branches supporting our customers in communities right across the whole of the United Kingdom. And that's a great place for us because it means that supports our position around serving everyday banking needs and our small businesses. The second part that's important on branches is, of course, we'll be led by our customers. And customers have been really shifting their behavior. In the last 2.5 years, 3 years, since I've been in this role, we've seen a growth of 30% of digital customers, people logging on at least 30 times a month, and the capabilities available to them digitally have gone up. And in that same period, we've seen a reduction in our branches, the same branches at a community level, of up to or more than 30%. So there's a real shift in customer behavior, and our strategy and our focus is to be customer-led in that context. Yes, the FCA came out with some new guidance around access to cash yesterday. The good news for us, I need to go through the details over the next few weeks with our regulator, but it looks very aligned with the way we take decisions at a local community level and make sure there is availability of other services if we make a decision to close a community branch. So that looks very aligned with our current processes. The key thing, though, here is we're the biggest digital service in the UK, we're the biggest branch-based banking provider in the UK, and we know that that's really important for many of our customers, and we'll continue to evolve that as our customers' behavior changes over the coming years.
So, Charlie, let's then go from that domestic story to the international one. We know, of course, in this new government, Lizzy kind of hit on this as well, there is a big, big push to bringing in that international investment. In your view, what's getting in the way of that?
It's different for different sectors. I mean, the starting point, and I guess you'll have seen this through your conversations in the last few months, is actually the UK has been an area over the last few years which hasn't been a priority for many international investors. But in the last 6 months and in the first 6 months of this year, we've seen real interest in the UK, including in my own sector, including in financial services. People looking to the future and seeing that the UK looks like a stable place and a place they want to invest over the coming years. The next thing then is where people are investing. And as you know, we're the biggest supporter of some of the biggest international investors into key areas like the energy sector, like infrastructure, like housing, which is where people really want to invest. And the issues are different by sector. But they come down to things like planning reform, connectivity to the grid, clarity around the government and society's commitments to some of the key technologies, and then in some sectors, some areas, really making sure we're using the brilliant universities and apprenticeship schemes in the UK to build skills for the future. International investors want to see those things being unblocked, and our core belief is, and we're a big facilitator of international investors into the UK, our big belief is if we get clarity around our priorities and we unblock some of those things, we're going to see real interest in investing further over the coming years in the UK.
Some of those investors, Charlie, might come from private markets, from private equity, private debt. What plans do you have to muscle in on that $1.7 trillion private credit industry? We've recently been reporting that Oaktree Capital Management is partnering with Lloyds on one project. I don't know if you can tell us about that, but what broad plans do you have in the sector?
Yes, I think when you think about long-term investment, patient capital, there's a few different sources, and we've already been a leader in all of those in the UK. But just think about it through. Obviously, bank-based lending is really important. Syndicated debt and making the bond markets work remains a really important part of financing those areas. As you know, we have a really significant insurance company and a pensions business, and that's one of the areas where we can invest ourselves through our insurance business, our Scottish Widows business, and partner with other insurance companies. Legal & General is a leader in this context in the UK that we partner with in this context as well. And then, yes, sponsors and private credit is another important area of investment. And we're a leader in supporting those providers and enabling customers to get access to that finance across the piece. And of course, finally, equity, whether it's IPOs, but our own equity business. We have a Lloyds Development Capital business, which is investing in businesses across the UK at a community level. So all of those forms of investment are important. Private credit brings another form of long-term patient capital. And whether it's international private credit markets or private credit businesses emerging in Europe and the UK, we do think there's real opportunity to bring that money to bear, and we're partnering with them. And Oaktree is a really good example of us doing just that.
Charlie, thank you very much. Charlie Nunn, CEO of Lloyds Banking Group, thank you very much for your time this morning. Let's get back to the market story, because we've talked a lot about what equities are doing this morning, selling off essentially. But let's get to the bond markets and see that side of the asset allocation. The bond markets are attracting a bid this morning then, Kriti and Lizzy. We see Treasury yields coming down. In particular, at the 2-year horizon, US Treasury yields are down 7 basis points. So some quite considerable moves there. And interesting, we were talking to Rachel Evans on the FX and rates team earlier, and she was saying, this is former Fed speakers saying, actually, come on, we need those rate cuts a little earlier than we thought.
And indeed, that's what traders seem to expect from the Bank of England. You've got traders now pricing a 43% chance of a cut next week at the meeting, hence why the 2-year gilt yield this morning's been at a 1-year low, currently lower 5 basis points at 3.9%.
Yeah, it's interesting, and it follows this kind of global move that you were seeing in the world bond markets. A 2-year, for example, over in the States, 435 there. You're seeing the curve, the 2-10 curve, the most disinverted, or actually the most inverted, or the least inverted, I think is the way to say that, down about negative 12 basis points since June of 2022. So again, a global move that you're seeing from the UK to France to the United States and, of course, in the Asian markets as well. That does it for the opening trade. You've got me for the Pulse up next. We're going to be talking about some more of these earnings-driven moves, a lot of the Stellantis story, the luxury story, the automaker story. We've got you covered in this next hour. Stick with us. This is Bloomberg.